Phoenix at the team.
All right, ladies and gentlemen, welcome back. Chart Talk 86 in the building. We got a pretty ugly Monday to start the week, so let's jump right into the market outlook. So, pretty much, we got a nice pivot in the S&P at first support last week. We first began to turn down, immediately pivoted, marched back to new all-time highs, and then we got weakness today. We saw in the final hour of trading some nasty selling, and where it really came from. If you look over in tech, the Qs look pretty terrible. They've come off highs viciously. Bringing up an S&P map here, or just a full map really, and you can just see how S&P shows it better. How it's really, the tech is just the outlying, glaring weakness of the market right now. Huge red in all those names and all those sectors. And the rest of the market wasn't really too bad today. But what happened was, tech weak all day. We saw some vicious selling to close the day. And that really brought everything else down with it, which is why, we saw this big red day at highs over here in the S&P. So, overall, tech looks terrible. We're definitely seeing a very difficult earnings season. Names really aren't getting rewarded like we've seen in the past. So, it's just we're at highs right now, and it looks like, the market wants to come in a little bit. So we'll see what the rest of the week has to offer. I think you got to have your eyes on the Qs, though, and, see where they stop selling because they're just dragging the whole market down with it. What are you thinking over there, Ben?
I think, like we just touched on with the Qs, for example, it's like the first time we're seeing them come into the major pivot. Like for the Qs, it's, this 324 area. This is the first time it's coming into the support area. And normally, the more times we hit support, we end up pushing down through it. And even for the SPY 410 is that other pivot where we haven't tested that yet. But typically, we start to see names starting to test support more frequently. You tend to see that follow through come in time. So definitely with you on that. And if you'd like, we can jump into some of the top ideas.
Let's jump in.
All right. First one, we have this TTG.
TTG, right? Yeah. Yeah, so, this is, very wide flag at highs. This has earnings, tomorrow? So, we'll see what earnings bring to the table. This one, it looked pretty good. Looked good Friday. It looks like it might test that 625 level soon, but, the market dragged it down. We're going to see this a lot. We're going to have a very similar theme, with everything being dragged down in the last hour. It really just got dragged down by the market. So, I'm expecting a lot of this today. What's next?
WMG, Warner Music Group.
Okay, this one still got some legs. Yeah. So, what are you thinking above these highs? This 40 area in time?
Yeah. So you kind of have like a little support buy here, up through 37 versus 35, but that bigger area, 39, 40-ish.
Yeah, definitely. Still looks pretty good. Held up really well today.
Disney, DIS.
Disney up next. Yeah, this is a nice one. It was flagging at highs, looked pretty good coming into the week. I was looking at this one, potentially to buy it, but, what we got is it looked good in the morning, sold off towards the end of the day. But definitely a good name here, good name selection.
Yeah, this is one, like, for me, like up through 190 versus 180, just wait for that area to kind of trigger. Next, we have this ICE.
ICE?
Yes.
Yeah, this one came off highs pretty hard here. It looked like it wanted to, relax. It looked like it wanted to pivot and, kind of push up off this first support level today. And again, probably end of the day weakness. Yep, end of the day weakness we see right here. So, if the market wants to come in, we'll see all these names put pretty similar price action in.
Mm-hmm. Another one that was kind of held up to was this DAR.
DAR. Yeah, this one looks good. It's got earnings coming up tomorrow. That's another one. Definitely like the flag at highs. These are definitely the names we want to be focused on. You look elsewhere in the market. You look at something like Amazon, where the strength not is. It's just continuously selling off. So we want to avoid those names that are relatively weak right now, and look at these. This industrial name like DAR, where it's flagging at highs. So definitely a right name here. But earnings tomorrow. So see what earnings have to offer.
Let's see. Next up, we have this ALE, 72 level.
Yeah, this one looks okay. It's utility. I'll never be too excited about a utility chart. Flagging out. So overall, but you're seeing like the shift that we're having to make right now. Like this is where the strength's going. Utilities, defensive sectors, things like that show the market is generally underlying weakness within the internals.
We got one more. We talked about this one last week. The candy company, JJSF.
JJSF. So yeah, this JJSF looks good. Tried to break higher today. Again, sold off end of the day with the market. If the market wants to come in, it's going to bring all these names in. This one looks definitely good. More of a cyclical name, more of a reopening name. These are the names that are getting strength right now. So these are the names we got to gravitate towards. Definitely looks good through this 170 still as more of a macro trade.
Mm-hmm. Yeah, I have three quick ones if you want to go to that email really quick. And first one is the MXIM.
Yep.
Yeah, so this is one, again, blue sky breaker through 98, just waiting for that new all-time high. Again, more of a macro pattern. One to keep on the radar. Again, sold off today, so not expecting it to go anytime soon. But if and when it does, that's when we want to be involved. Next is APH. Another similar setup, 69 through all-time high, still verse 65, so it's still a little wide. And lastly, this DRI, which Jake, you also been keeping a close eye on as well. So I'm actually in this one. I bought up through 45 earlier last week.
Okay.
Looked to buy up through 145 again versus that 140, and then looking to add, through that 148 and that 150 in time. So just trying to build into this as it, just continues to flag out.
Yeah, and I think just going through these charts is like these being the best ideas just kind of shows where the market's at right now. Definitely not a time you want to have your foot fully on the gas pedal. It's been a difficult environment. We're seeing a lot of names come in off highs. Like all these charts we looked at, none of them are really, I would say, special. And the sectors they're in, they're in the right sectors that are the strong ones for now. But we're not going to see these names rip 10% a day or anything like that. It's anything that's winning in this market is simply just grinding higher, which is why it's been really a difficult environment. So that these names we just looked at just amplified how difficult it's been.
Yeah, even though I scanned like the entire S&P, and there were so many names just top right on, just like drifted higher that like there was just not easy setups today. Where I found like one support buyback out of 50 names that were just at highs pulling in that, like you said, just very slim pickings from some
slim
really good
pickings.
setups. Yeah. So we had one main question this week. That was, what's the difference between like a tight consolidating setup versus a wide consolidating setup?
All right, what do you got?
All right, so I think this first one will be this DRI, which is a pretty good example. Through all-time highs is 148 versus 140. You're risking kind of 2-3% in this example. If the trade was to fail, this is a tighter consolidation, where something like CTSH, you have that, when you pull it up, Shake, let me know.
Very wide range here.
Yeah, so it's like you have 82 is the high of this range, the low is 72. It's a 10-point range. So in this example, if you're buying back up through 82 in time and say this is the range, you're risking 10 points in an $8 name. You're risking 20% in this trade, where you're risking 2% in DRI in the more expensive stock that's has a little bit tighter of a range. So again, we're going to gravitate towards the DRIs, the more the tighter consolidations, where sometimes a new trader might not notice that and see the stock flagging at 10 versus 8 and saying it's $2 risk, but it's actually 20%, and they'll pass on the DRI, which is 2%, because they just think it's too expensive. I don't know if you have anything to add to that one.
Yeah. All right, where to from here, sir?
Well, I guess we could jump into good and bad trade if you want.
Yeah, all right. So I'll be really quick. This B Pop, I'm still in this one. There's a few names I still like out there. I'll touch on them right now. This B Pop, flagging all-time highs. Regional bank, this is what I'm talking about, where it's like the grinding type name. So I'm still in this one. It looks like it's gonna come down and retest the 75 level soon. I'm looking for it to pivot there and create some new support. In that case, I'd probably buy some more if I did see that pivot. If I saw this area turn to new support. But these are the type of names that are winning right now. The Banco Populares, these aren't really sexy names by any means. I tried this Amazon pivot last week. I actually had a really good entry, and I got out it Friday, so I made some money. But overall, this isn't really where the strength has lied. I just bought this pivot. It's been a market leader, and I saw the turnaround. I saw the Nasdaq turnaround this day. We got a nice little 2-day move out of it, but unfortunately, all these names came back. That's kind of we've seen this wild underlying tech weakness. Looks like we could see this weakness persist through the week. So a few names I still like though. It's Mondelez right here. We look at this huge earnings level that it took out. This is an absolute grinder name. This is like the guys who make M&Ms and things like that. So if this one wants to pull back to the 60 area, I love this name on the pullback. I think this Hasbro, we tried it today. It was a victim of the market's weakness, trying to take out a huge macro level in this 100, 101 area. I think this one still looks good if the market wants to pivot and show some strength. And then that DRI you mentioned doesn't look like it's going to go this week. And then another name I've been watching closely. Oh, and I touched on this trade. No, you got to relax, good. So this CWH. So this is Camping World Holdings. I'll bring up the earnings. They had some sick earnings. I'll show you what we like about them. So they huge beat on the EPS side. Beats by 66 cents for $1.40 earnings. We see this huge revenue growth. They're beating there. So all those things are looking good. And then you couple in the fact it's one of these reopening names. So this is what gravitated towards this stock. So had the big move on earnings. Came back due to the market weakness. I entered it here on the pullback and added this day right around 44.75 or so against the 44 area. So, if the market, it was very strong all day. Market pulled back and, sold off towards the end of the day. You look at 15 minute, just kind of march lower at the end of the day with the market. So this one doesn't look like it's going to work out, but I'm definitely keeping a close eye on this name. I definitely like it going forward for the quarter. But just overall top environment right now. Don't have them feet on the gas pedal.
Mm-hmm. All right, so if you want to pull up mine, first one is at CTSH.
Yeah, you got it.
Oh, so this is perfect example of forgetting when your stock is reporting earnings. So blue sky breakout through that 82, had a sell stop below 80. Human error, forgot that they had earnings coming out 2 days prior. Caught the gap down. And normally, had I known this, or known the name was reporting and I got stuck in the gap down, would have been really no problem. I could have easily canceled the order. The fact that I forgot and had that order in, that sell stop, it basically triggered me out, 9:30 and 5 seconds in the open. I was pushed out of this name, which it opened up pretty much near the low of where it traded. So I got pushed out like 73. So I ended up losing, almost 8 or 9% in this name from just purely, mental error. Oof. So it was definitely, again, and purely my fault, nothing else, So that, again, you got to know any names reporting earnings. And lastly, this TJX.
Oh,
this was, again, just not respecting the pivots. With a lot of things we've been doing this very well with lately, that we're still in PHM, UPS, MMC, DHR, all these names, just respecting those, even, AbbVie. Just a bunch of names that we've been respecting those pivots. They've been working, where this one deviated from respecting that prior pivot and try to up the stop and limit the risk and just push me out for a dollar loss when the name is still working. So this is kind of why, trading was so easy. Everyone would do it, but again, we all make these mistakes. So those are the three, I guess, bad trades for the week that I had. And then the ones that are still working, just still holding.
All right.
So I guess we jump into book of the week.
Yeah, let's jump in, huh?
What do you got?
Get a little spot chart. I was reading some Minter Vinny, Think and Trade Like a Champion. Classic book. This guy's stock market wizard. He's an absolute G. He had a great point that, I think we were seeing a lot of new guys who had amazing years last year, and now they're obviously not seeing the same success. And, he has a chapter talking about kind of the mental aspect of things in here that I think people could really get a lot from, because he's talking about how you should reward yourself for when you get stopped, when you take losses and you obey your plan and you take small losses. You don't turn them into these massive losses. Everyone, of course, they buy a stock. The first thing they do is envision how much I'm going to make money off this. But you need to be realistic about the different scenarios that happen when you enter a trade. And one of the very realistic scenarios is you losing the trade. So, he had a part in here where he's just talking about, you should really reward yourself when you take that small loss and you don't turn into this big disaster because, you took the trade for a reason. It fell within your system. It just didn't work out this time. You take that same trade 10,000 times, it probably works out over the long run. But I think it's really important for new guys right now not beat themselves up too much and, kind of take what the market's giving you, seeing that we're not seeing this breakout market. We're not seeing these names run 20, 30% a day or we're seeing these growth stocks get murdered. So, I think it's just very important to have the right mindset right now and understand that the market isn't, giving great action. So don't push it like crazy. Don't have the huge risk on every day and try to make back any losses. And two, it's okay to take a loss. That happens every day. Happens to me, happens to you. So, it's all about, staying in the right mindset when in trading. And I think he did a really great job touching upon that.
Yeah, I completely agree with you on that. This past weekend, I was talking with Dennis. We kind of touched on this where, for myself personally, this last year, it's been the biggest focus of just the break-even trades, like this TGX, for example. Even though the trade worked, losing 1% or break-even, that's been my focus for a while now. And this recent shift of giving it versus those proper pivots, which, again, they've been working in the winners, that you and I we're both in UPS working great. But then when you have the ones that fail, like Snow, for example, you have to be willing to accept, the 7 or 8% or 9% loss to catch the 30 and 40% trades. You can't,
Right, that's the game.
You can't, for me, I can't expect to risk 0 or 1% in a break-even trade in TJX and then expect to catch the 30% move.
Right.
So that's kind of those trade-offs. And there was one of the members I was talking to earlier, and he caught this crazy move. The name that he was in, it was up like 20% before he got in, and his stop was literally below the low of this, like the day, which was like a $1 range. And I'm like, look, you're already up 20, 30%. Giving it versus that stop is just going to push you out. Like, you're not going to, if you want to catch 100%, it's impossible that tight of a stop is going to keep you in for the rest of the move. If that's the goal of 100%, like, you have to be willing to give it back that 20% to break even to catch that next leg, because it's not going to just perfectly grind higher. But so yeah, definitely agree with you on that. I'm still an anti-fragile, just grinding through it. Nothing really to add on to this. It's just, I have to just push through it and get the.
Any recent lessons from the book or recent stories you want to touch on?
There was one funny one that we can definitely personally read to it, and he talks about. Hold on, let me just get the page. He talks about how, like, traders and like revenue producing employees are like the worst to manage. Traders, trade in their P&Ls is their livelihood, and for, say, advisors who are bringing in assets, they're not like the back office guys. And he would just say, like, how these were the worst people as managers to keep a handle on, because they just didn't care. They knew that they were, if they made money, that's all that mattered. And I think of, like, us at the prop firm, like the bigger guys who were making 100K off Twitter to IPO day. Like, we'd have to be there at 7. They would come in at 9:35 to bell open with Jamba Juice, and we'd be getting screamed at for coming in at 7:01, and they'd be getting, like, dapped up for coming in after the open. Yeah. And that's like 100. Like, when reading that line, it's like 100% can relate. And then, like, for me as an advisor, when there was the crappier advisors that just weren't doing as well, like, they would get the same kind of treatment where I was able to leave at lunch and take off half the day, and it's like I did my job, so it didn't. But that was the one page that I was able to, like, definitely relate to and be like, this is 100% true.
Yeah.
But yeah, nothing really. I wouldn't recommend it if you don't want to fall asleep.
All right, great take there. Thanks for that update. All right, that's all we got for you guys. Catch you guys next week. Chart Talk 87 next week. Who knew it? All right, see you guys next week.